Colleagues, it's Tusanam PM Sebata. I'm doing a recording on RCL, the Royal Caribbean Cruise. This video is going to be slightly different from the usual videos which I usually do, because I'm not going to show you anything to do with the intrinsic evaluation, and I've also not done it yet, but I'm going to do it. But for this purpose of this video, I want to keep it short and show you something which I never shared in the previous year on my trading. I spoke about it, but I never shared it. That's how I structure my option positioning. That's what I want to focus a little bit more on. But for starters, I'll start with this usual one, where I usually drive some thinking before I put the numbers into my templates and work out the intrinsic valuation. The return on investment looks a little bit low, but this is predominantly the US, so the cost of capital will be low, so this might be returning some money. That's fine. And other than that, there's nothing really untoward about this company, except that it has rocketed up in share value recently. From the beginning of the year, it zigzagged, but it has made about 42% for the return over in a year's period. If you look at from that zone around here to where we are now, it's given us about 44% run, and this run has been great. So from my technical analysis, that's where I'm going to go to next. When I look at my charts, that's not what I want to show you. Yeah, technically based on a daily chart, because it's very difficult to trade this one on a weekly chart. It responds more accurately on a daily chart. So there is that last move up. You can see here when it was basing, it made a double bottom, and that double bottom was picked by the grouping here and another grouping there. So we had this double bottom. After that, it shot way up there, and all along here you can see it never closed below this baby blue line, the chicken sen. Kept it up there. So using my approach on technical analysis, I would have always been in this trade, because I would have wanted to see a close below this one and parabolic flip over. Like here we had the parabolic flip over, but we didn't have the confirmation of close below the chicken sen. Similarly, currently now we have the parabolic flip over, but the price hasn't closed below chicken sen. But this time it's slightly different, but I won't go into the nitty-gritty of the details. You can see that we have had groupings there, another set of groupings there, and another one there, and currently we're making new highs there. But there is a clear divergence. Since that grouping there, RSI has refused to make new highs with this one, so we're having a small divergence there, telling me this is likely to be a top. When we got here, we never had the divergence. This was making a higher high from that one. So you knew it was a continuation. It was not going to drop that much at that point. But now we have divergence. It's clear to see. There it is, downwards. And parabolic has flipped over to, if you connect the bottom part here and this part which sank a bit after the parabolic flip over, you connect those, you see that we have now had a break, a trend break on the RSI, reflected by that red line, and I've highlighted that in that white dot there, that the break has already been done on the RSI, not yet on the chicken sen, but parabolic has flipped over. Also, if you compare this high there with the current one, we have made a new high. But if you come and compare this level here and the current RSI, currently we are higher, which is reverse divergence. So this is definitely a topping session, parabolic flip over, trend breaking RSI, and I'm ready for this one. So my position will be, I'll be shorting this stock at this position. It's an aggressive entry, but I'm comfortable making this aggressive entry because even if I get it wrong, I'm covered on the wrong side. You have to think like a Grandmaster about 4 moves. 6 moves ahead. If it doesn't break down as I expected and continues going up, will I lose money? No. But that's the second part now. That's how do I structure this using options to make sure that if I'm wrong, I don't suffer that much. If I'm right, I benefit greatly. Let's look at the structuring. This is how I would structure it. I would buy at 130. Why 130? I'll buy puts at 130. Why 130? Because currently we're trading it closed at 133. I'll come down here and buy some cheap puts because they'll be out of the money. I'll buy them there. These are the puts which I'm buying at 130 there. We're currently trading there, but I'm buying puts slightly out of the money so that they're not that expensive. What else do I do? I also do a vertical spread, also on 130. That's where I'll be buying the other 20 puts and selling to make the credit spread. I'll sell the other ones at 135 just to strangle the current price, where the current price is at. So just looking at this vertical, if the price trades below 135, I'll make about 446. If it trades above 130, I'll make a loss of 53. So it's just about balancing off. But that's not the purpose of this. I'm not going to look at how I'll defend and adjust this spread. I just want to explain the setup as it is. So this is how I would set up. I'll get this vertical, and not the vertical, it's 30 days ahead. It's not the same time. This is a diagonal of some sort. So this one will be at I've picked it to be about February 20. Yeah, it's about 42 days or so. No, 30 plus 20, it's about, it's about 50 or so days from now. If I had taken that on its own, the price is here and I'll be trading there. The max loss I would make there is about 38, right? If this was the only trade I would put. And just look at it for me. If it went up to, call it 117, I'll show you why I'm picking 117. I would make about 9 grand. If I would, but the risk would be 3.8. So once I put this structure, if it goes to 117, yeah, 117, I'm making about 4, greatly reduced. I'm making about 4. What is my maximum risk? 5. But here's the other effect. If I'm wrong and it goes to 146, I'm making money again. It's not a lot, but I am making money. It's more than 10% of the maximum I would have lost. Don't worry about this because it's a weekend and this is a demo part. It's not my live account. So that's the key part. If I'm wrong, maximum I can lose is 5,000. If I'm wrong, I'll get about 700, more than 10% for being wrong. And if it's circles around this area, I can always structure a triangle. Sorry. Okay. No adjustments. I won't talk about adjustments, but it's easier to set up something here to cancel this off. But here's this. This is the setup I like. If I'm right, I'll make some serious money there. And I'll roll these things and do some funnies, but if I was just to go and structure it and leave it as it is, this is how it will look. It's more like, it looks more like a ratio back spread with some adjustments which make it more profitable. If you understand options, you can have a look at this and analyze it. And also, just for those advanced a bit, once this starts moving in my direction this way, I can keep rolling this put which I sold. I can keep rolling it, bringing it forward and forward this way, so that it really doesn't become a drag on me, and this put which I bought here starts adding to my position. So by all means, whatever this thing is set up at originally, I'm likely to collect about double that. If it moves slowly with me, then I'll collect. If it moves aggressively, then I'll collect almost on the purple line, because these are almost tying together there. That's the structuring. And let's go back to the chart, and I want to throw in some Fibonacci numbers just to illustrate. Last year I kept talking about 13% and doubling my returns. Just want to illustrate that my magic number of 13, whenever it happens, I'm likely to double my returns. I'm looking at this one to come to, that's why I was talking about 117. The 50% retracement is at about 117. But looking at this, I expect it to come back deeply, big time deep. Most probably at 61.8 retracement. That's where this thing has been finding more support there. So let's suppose I'll put two lines here just to illustrate this point. If it retraces to the 50 line, I'll just make it an estimation to just pass it over a bit to be 13. It's not exact there. Yeah, 1690, 116.90. And also if it comes down to 68, 61.8 retracement, it will be about 15% return. Why I was picking on this one, I wanted to illustrate the point that whenever I get a option structure to move in my direction for about 13%, and I'm structuring these options, I usually double what I'm getting to. Let's go back to my option structure and look for 117. There is 117 there. It's not exact, but we're almost there. So 117 is somewhere there. Call it, because I won't wait for this until close. So likely that this purple line would be above 5 already at 117 here, because it will be between these two. This one is the current, this one is at expiration. So this one will have moved a little bit down here. So it will be somewhere just above 5. If it's above 5, I would have doubled my maximum risk there. So my return will be about 100%. It usually gets even more than 100%, but I said the other thing is making adjustment as I'm rolling the credit part, which will give me more money. But yeah, without rolling anything, if it comes to 17 there, I would double my returns. The amount at risk will be 5 grand. Now I would have made another 5 grand. So I would have doubled my return. Yes, there's more money to be made if you want to take the risk. Take that risk alone, get to 117. There you're already about 10K, doubling your actual amount, tripling your amount at risk. Because the amount at risk is about 4 grand. Now you're at about 10 grand. And it also depends when do I kill this vertical. But I prefer to roll it. It makes me more money by rolling the credit part and leaving this one to also contribute to my imaginary big returns, which I've executed several times to make sure that they are practical. So that's it. But I like to be protected, so I won't go with the put straight. I'll have this structure, but be very aggressive in rolling this vertical, the credit part of it. So that's my structure. But if it went to 61.8 Fibonacci return there, which is what I think it will do, there's a gap to be closed there. That's a very manageable area. Big resistance, it's about 113. And on that structuring, if we get to 113, we're somewhere here. I'm making about 8,000 return. 8,000 to 5, it's about, yeah, it's way more than double. And with the adjustments, I can assure you will be at about 200% return, 10,000 grand for this structure. That's how I usually talk about structuring these things. If it all goes wrong, I'll make money going that way. And also, remember, I have lots of these. Okay, let me break it down. This one, I'll leave it as it is. It will be making me money. Because as soon as it goes below 135, this is making money going that way. It will be the purple line approaching there. So I'll just leave that. So what I will need to deal with is this part. So if it starts going that way and I'm panicking that no, this is not working, I'll automatically start to come and feed across and convert this to a credit. How will I do that? I'll just sell at 140. Same period. Let me just go and do that and say the amount would have changed because it would have moved a bit. But I'll just come here and sell. Have I done it right? Wait, let me see what I've done here. I'm a little bit confused now. Okay, this is the original risk profile. That's the complete one. So I've shown you about the vertical I'll leave as it is. It will become profitable if it goes against me. So I'll leave that one. I'll only have to deal with this put option which I bought. So I'll remove that one. That one comes back, and if I sell this one there, I've got it, the time's wrong. Let me just correct the time. Yes, I'll just sell that one there. Now this also starts benefiting me. So if I'm wrong, I'm now making money with this one. Just for argument's sake, that would make me 4 grand, almost 5,000 going there. And this one would also be making me some 10 grand or so. In total, all of them will be making me about 10 grand if they stay wrong for that long. If it's on the purple line and it moves below 135, I can start making 35, 48, 43, it will be anything more than 5 grand. So I'm likely to make 100% return if this thing goes to 144. Go back to the charts. It's trading there. If it goes to about 144 somewhere there, I double my returns for being wrong. Once I make that adjustment, I'll double my returns in the wrong direction when I got it wrong. I know this can be a little bit complicated, but yeah, I just wanted to illustrate that point. But the basic structure is this one. Looks like a back spread ratio. That's how I would structure it. If I'm right, I'm definitely making a close to 200% return with some adjustment. Without any adjustments, if it gets to 17, let's just call it that I will double my returns, make 100% return. That's how I structure my options. When it's like this, I'm not panicking that I might get it wrong. If I get it wrong and terribly wrong, I'll also double my returns, and if it keeps flying going there. But usually I would expect it to come to this level here, where I would double 200% return is reality. If it gets to this one, it's a definite. That's how I structure it. And my technical analysis tells me this is good time for shorting RCL. Colleagues, I think you have not dealt with the intrinsic valuation, and I rarely take positions without looking into that one. So tomorrow, being a Sunday, I'll look in depth on the intrinsic valuation, but this is how I would structure it. And this risk profile would be much better when you are structuring this thing when the trades are live. You get better numbers here and all that stuff. But I just wanted to share this one, and I rarely share this one. It will be more like throughout the year, I won't be sharing it. I'll just be mentioning that I'll do my option structuring. But this is what I'll be talking about. I thank you. It's 9 p.m. Sebata. Have a lovely new decade. Bye-bye.